This is the Global Economic Scrap Metal Commodities and Recycling Report by Benlee Roll-Off Trailers and Open-Top Scrap Gondola Trailers, November 4th, 2019. U.S. steel production rose to 1.866 million tons on a continued slow growth economy. Oil fell to $56.20 a barrel on a good balance of supply and demand as OPEC continues cuts and the U.S. continues record production. U.S. weekly oil production was steady again at 12.6 million barrels a day at that record high, but the oil rig count hit about an 18-month low, so less steel is being used for rigs. Record oil production remains great overall economic news. Iron ore fell to $85.50 a ton on continued global manufacturing slowing, while China growth actually continues. Scrap steel number one heavy melt remained at $182.67, a multi-year low, but November should be flat to up $25 or more depending upon the U.S. market territory. Hot rolled coil steel rose to $24.79 a hundred off the 3.5-year low. GM is back running, but much manufacturing demand remains pretty weak. Copper rose to $2.66, a multi-week high on the positive U.S.-China trade news. Aluminum rose to 80.66 cents, a multi-week high on the same positive China trade news, but aluminum scrap really remains pretty depressed. China's October manufacturing index rose to 51.7, the strongest pace of expansion since February 2017, as output grew the most since December 2016. New orders increased the most in over 6 years, boosted by exports, and purchasing actually increased the most in 20 months. U.S. GDP Q3 growth fell to 1.9%. 2018's growth last year was 2.8%. 2019 is now estimated at 2.4%, and 2020 next year is estimated at 2.2% or less. The problem is the White House forecast was that the 2018 tax cut was to bring 4, 5, and 6 some odd % growth. This current slow growth is despite huge government deficit spending, with larger deficits to bring higher taxes and slower growth. The U.S. jobs report showed new jobs created fell to 128,000, but while nowhere near the 320 to 340,000 new jobs a few years ago, it was still a pretty good level, and importantly, new jobs support consumer spending, so this is great news. October's U.S. unemployment rate rose slightly to 3.6% as more people joined the workforce, so the labor participation rate, which is all people 16 years of age or older that can work, edged up to 63.3%, meaning only 63.3% of people that can work are working. This is good news that the participation rate is rising. As for where the U.S. jobs were in October, we see that leisure, hospitality, healthcare were up very nicely, while manufacturing had a huge loss, which overall pressures lower commodity prices. The U.S. Federal Reserve lowered interest rates to counter the economic slowdown we're seeing. It's unusual to do since the stock market is at record highs and the employment rate is at near those 50-year lows. Wall Street's Dow Jones average rose to 26,958, near the record high, which brings the wealth effect, which is when people see that their Wall Street values are high, that brings spending as people feel wealthy. As always, feel free to call or email me with any questions. We hope all have a safe and profitable week.